Welcome to Think Smart with TMFG. I'm Mike Connon. I'm here with John Iaconetti, Senior Financial Advisor with the McClelland Financial Group of Assante Capital Management. So, John, I was thinking the other day, we did a podcast a while ago talking about great inventions.
Yep.
You know one of the great inventions that we missed?
What was
rope. Like, rope is one of those things that it's been around for a century, beyond centuries. It's used for everything. It can do a million things. You can tow things with it. You can use it to tie knots. For sailors, it was one of the most important, I guess, inventions. And it's been around since, I think, caveman time when you could put vines together to create something to tow stuff. But another thing with a rope is you can also hang yourself with it. Right?
Many uses. Yeah.
So on that idea, let's think of another great thing that's very useful, but it can also be used to hang yourself.
Well,
what can you think of?
Considering we're in finance, a good one would be credit cards.
Credit card, absolutely.
Yeah, so absolutely handy. Even now, probably don't even need the credit card. You could just tap with your phone now with the credit card built in, but the ease of access is fantastic. But to your point, when using correctly,
it's one of the most useful things, and I see more people in trouble from credit cards than anything else. So let's start off. What is a credit card?
Yeah, so essentially, credit card is just going to be, a physical piece. It could either be the card itself, or like I said, now it could be digital in the form of what goes onto your phone. It's essentially just going to give you access to additional funds that may be not in your bank account that you're going to be borrowing for day-to-day transactions. So some of you listening or watching, you're probably thinking, of course I know what a credit card is, but just in layman's terms, that's pretty much it.
You never know. I have an 18-year-old daughter.
Yeah.
and I said, get a credit card. And she didn't quite understand the concept of how they have to be paid off. And I sat down with her and, explained the devil of the credit card and went through it. Because, a lot of young people, I don't know how many young people listen to this podcast, but it's good to have them out there to get an idea. And I guess the pros are the things that you need in life are a credit history. So you do end up building up a credit history. A lot of the credit cards now have rewards and points. And if you know how to use those right, it can actually, give you a big advantage in life because you don't pay more to use a credit card. But you're getting something back from using it. So it's actually pretty good. The other thing is fraud protection. They're actually pretty good when something goes wrong. Many credit cards, even something gets stolen out of your car afterwards, they will insure you on your purchase. You don't get that with cash. Some of the cons that you end up with are definitely high interest rates if you don't pay in full. People have trouble with overspending. There's a real mentality where I want something and the credit card gives you the ability to buy things you can't afford, which is extraordinarily dangerous. And, if you do mess up on payments, what we talked about with trying to build a credit score can have exactly the opposite effect on there. Types of credit cards. What types are out there?
Well, to your point, there's going to be two main ones, right? There's going to be what's considered just a regular credit card or something that's unsecure. So essentially you're borrowing money from the company or banks that issue the credit card. And these are going to have very high interest rates. So probably the consumer credit that you're most accustomed to, maybe around 20 to 25% in terms of the interest rate on that card. A little bit more uncommon is a secured credit card or secured line of credit, which you're able to then borrow the same amount of money, but there's some degree of asset that's held liable, I guess, in the sense if you aren't able to pay that down. So it could be collateral in the form of a house, cars, boat, things like that you're able to hold as collateral.
I guess the key take back we talk about is with credit scores, the key number one is to make sure you pay on time. And number two, if you can pay your balance in full. From what we understand, that makes up about 65% of your entire credit score is based on your on how you deal with credit cards. And, credit score, we don't think about it until you go and take a mortgage for a house.
Then it really matters.
Then the banks seem to really care about that stuff. Let's talk about how credit companies work. So we know if you don't pay, they have stupidly high interest rates. So where does that interest go? Does that go to the credit card company, or how does that work?
Yeah, I think that's a common misconception. A lot of people are thinking, Visa must be racking in all these funds because they're collecting the interest. It's a little bit different. So it's let's say hypothetically you have a Visa card with TD Bank. Well, it's actually the bank itself. So TD Bank in this scenario would be the one who is collecting the interest. The credit card company, like Visa, wouldn't necessarily be collecting on the interest. They'd be collecting on the other side of it, which is fees, merchant fees.
So I guess what happens is each credit card company is, every time you purchase, they're charging your merchant a bit of a fee from basically 1.5 to 3.5% on every purchase. It's sort of weird because, I have I'm not going to say a love-hate relationship with credit cards. I have a hate-hate relationship with credit cards because they've really went, and if you think about this from a big point of view, they've added inflation into our society. Okay, so this is a big picture look at things. What goes on is because they put that 1.5 to 3.5% into it, and most people use credit cards now, it's a new cost. It just became inflationary over time, and they've wedged themselves into that transaction, right? And right now, what happens is once they wedge themselves in, what happens? The merchants have to raise the prices.
They have to.
Because they don't want to lose their profit margin to Visa, so they raise their prices. We as the consumer are actually paying that money to the credit cards. So that's why I never like them. I know they exist, but and are needed, but it's one of those necessary evils that we have to deal with in the world.
Yeah.
Let's talk about how credit card companies can trap you. What are some of the rules out there to think about?
Yeah. Well, there's always going to be some degree of misleading. Anytime anyone tries to purchase something, you're probably going to do what most people do and Google it and what's the best credit card out there for me. Just like any other company, they're going to provide loads of money into marketing and into advertising as to why Visa is superior to MasterCard, which is superior to Amex, and for whichever different reason. So being able to just Google the information and figure out what's the best credit card might be a little bit difficult because everyone has their own self-interest that's going to be out there in regards to picking the best one. So there is going to be a lot of, and I always have this conversation with clients, there's credit cards that are tailored to different people, and we'll get to that a little bit later, but you need to figure out which one's best for you, not just necessarily just through Google.
Yeah, there's a lot of credit card myths out there. I'll go through some we had listed. Some people think you must carry a balance to build credit. That's absolutely not true.
Yeah.
So the best thing you do is pay off your credit card at the end of any month. Carrying a balance does no good. Some people think the more you spend, the better your credit score. Again, credit scores favor low credit utilization, ideally under 30% of your limit. They don't like you spend up to your limit each month. That's not a good thing for your credit score. Some people think the minimum payments are enough. And again, minimum payments will get by. That means they're not going to go and try to take your house away from you.
Yeah, you're paying your interest,
but what it does, it doesn't help your credit score either.
Yeah.
And the other idea is that you can't negotiate with your credit card issuers. A lot of times, if you're in a situation where you have a balance and stuff, there is room for negotiation, depending on them. So that's at times where you can go or have people go in and start to negotiate better rates. Even they can consolidate some balances into something that's much lower to go and get a better overall. Because some of these rates are, 20%
astronomical,
plus, which is ridiculous, right?
Yeah.
What credit card is best for me? So let's start by going through the age groups. If you're under 18, what's your suggestion?
Well, actually, under age.
If you're of the age 18.
Yeah. Well, for some under the age of 18, you may be used as an authorized user on, like, let's say, a parent's credit card. So if you're listening at home and you have a credit card, maybe you want to start building credit for your child. Maybe if they're in school or have some expenses coming up, you can use them as an authorized user, and that would actually help start the process of building credit for them. Now, from after the age of 18, probably while they're in their university years until 21, 22. Student credit cards. It's a great way to, I imagine for most students, there's going to be a lot of expenses of either going out for food or buying books or whatever it might be while you're at university. It's a great way to kind of manage that and be able to keep on top of your expenses. Again, not trying to carry too much of a balance, but utilizing those while you're in school.
I don't like credit cards, but sometimes you need them.
Yeah,
right?
absolutely.
I know people 18 have trouble renting cars, but you can't really rent a car without a credit card.
Yeah.
It's hard to book an Airbnb without a credit card. So there's a lot of things you actually need those credit cards for.
Yeah.
And I guess there's also secured credit cards too.
Exactly.
Where they have money in. So the credit card company isn't taking really risk there because the money is in the account. And again, that gives you the idea to have a credit card that you can use without having the, let's say, go on the negative balance side of things.
Exactly. Kind of like similar to a prepaid card that maybe the parent can help support the kid while they're in school.
Let's go to age 20 to 26. What do we think?
Well, it's going to be, again, now we're starting to think dependent on your preference and your situation, but there's going to be a lot of options out there that do provide cash back in terms of some cards.
We won't get the names because I don't want to go into all those. There's different ones around it. But
we won't promote any.
Yeah. They do have, you can start to get into that point once you move in past just someone giving you a credit card. You're in the stage where you're saying, okay, how's this credit card company going to help me?
Yeah.
What bonuses are they going to do? What type of benefits am I going to be able to use at this stage of my life?
Yeah, and by this point, you're probably earning, a fairly good income, so you could probably be eligible for new cards. And again, it's entirely customizable to you. I know personally, I'm a big fan of the travel rewards cards. It just makes it a little bit more guilt-free in terms of when I'm buying that flight, that I can utilize all these points and it offsets a majority of the cost.
And that's definitely, once you're past that stage, you're really looking for, what your lifestyle is.
Exactly.
If you're a traveler, the travel rewards actually work pretty well. So depending on, if you don't do much, cash back is sometimes the best. And just look at the maximum cash back you can get.
Yeah.
Final thoughts on credit cards. They are an important part of life.
Yep.
Everyone has one. It's pretty hard to get through life now without a credit card. Just be very careful. Most people's financial problems start with credit card issues. So I always remember that whenever we see, most of our clients are pretty savvy, but a lot of our clients do have kids or friends or relatives that are in problems, and that generally caused by credit card debt.
Yeah.
And it becomes a very difficult scenario to get out of. So the idea is you should always only spend what you make. And as we always tell everyone in here, we even talk to young people coming to the office, really you should only spend 80% of your take home, 20% should go to savings.
Yep.
And you should make sure that is saved. And beyond that, it can be spent on your lifestyle, but make sure that that credit card is not eaten into your ability to save.
Yeah. Yeah.
Well, that brings us to another episode of Think Smart with TMFG. Thank you very much.